According to Financial Express data, more than 95% of households prefer to invest money in fixed deposit. And when we look at SIP stats, then you will find out that Indian mutual funds have only 8.7 crore SIP accounts. Isn't it shocking? When we look at the current population of India, which is around 1.44 billion, so when you look at SIP invested in percentage, it is almost 6%, whereas FD investors are almost 95%. But lying on the majority side doesn't guarantee that you will also win, and especially when it comes to making money. Let's see what is right for you. Watching this one video can make your money grow from here to here. Obviously, when you implement it in your life. This video is divided into 5 parts. First of all, we are going to see FD. What is FD? How they work, interest rate, tenure, liquidity, drawbacks. Second part, we will look SIP, the same. Third part, we will cover FD versus SIP on the following 7 factors such as returns, risk, liquidity, tax implication, time horizon, knowledge required, for whom it is for. And fourth part, story of FD investor Rahul and SIP investor Ram, who wins. And the last part, how to make FD and SIP both work for you in a right way. Let's start with the first, what is fixed deposit? In simple words, fixed deposit are a type of investment where one does a lump sum investment for a specific duration in bank or NBFC. How does fixed deposit work? Look, when you do a fixed deposit either in a bank or NBFC, your lump sum amount is locked for a specific duration. You cannot withdraw before maturity. After the maturity period, one gets interest on the investment, which will be fixed interest that was pre-decided by the bank or NBFC. Note, you cannot withdraw in between the maturity. However, you can if you want by paying penalty, which might lower your returns also. When you look at the interest rate of FD, it differs from bank to bank. For example, you can see the numbers. Note, numbers can change over the period of time. If by chance I had not mentioned your bank in the list, do comment below with your bank name and the returns you get on FD. Whereas FD tenure can depend on you. Generally, it is between 7 days to 10 years. Well, in liquidity terms, FD is highly liquid because you can get your cash in front of you when you want. If by chance you want cash in between, you can get it too, but you need to pay some penalty. The major 2 drawbacks of fixed deposit are as follows. Number 1, low interest rate as compared to other investment option. And number 2, withdrawing before maturity can demand you penalty, which no one likes. Okay, now let's see what is SIP. SIP stands for Systematic Investment Plan, where one decides to invest a small amount of money in mutual funds, which means one can make themselves disciplined investing a small amount of investment on a regular basis. How does SIP work? Generally, when you invest in SIP, the amount is debited from your account and gets invested in the mutual fund, which you had decided. The only thing you need to do is set up it once. After that, you can automate your investment so that you won't miss your SIP in the future. You can get returns over the period of time. Well, frankly speaking, if you have little bit knowledge about investing, you can get around anywhere between 10 to 20% interest rate in SIP. When you talk about SIP tenure, well, it depends on mutual funds. Some may have minimum 1 years or 3 years or 6 months or 1 month also. It's important to read them carefully before investing any money into them. In liquidity terms, it is also good. You can stop anytime you want and get your money in next 3 to 7 working days. 2 major drawbacks of SIP. Number 1, little bit risky. Number 2, unlike FD, SIP don't provide fixed return. That means either you can get more or less than FD. All depends on your knowledge and also market. Now let's compare FD versus SIP. When you see returns in FD, generally it is 2.5 to 7.5%, whereas SIP it is around 10 to 20%. When you talk about the risk in FD, it is low, and SIP you can say it is medium. And liquidity, in both case FD and SIP, almost you can say they are highly liquid. When you talk about the tax on FD, you have to pay 10% tax, and depending on the tax slab you are in. Whereas in SIP, short-term tax are 15% and long-term tax are almost 10%. Time horizon, FD duration might be from 7 days to 10 years, whereas SIP has minimum at least 1 month, or you can say, and maximum there is no upper limit. That means you can keep on investing for how many days you want. When you talk about the knowledge required in FD, it's less, or you can say negligible. When you talk about the SIP, you actually need. Otherwise, you can lose your all money if you don't know anything about stock market. Now, for whom FD is, basically it is for safe player who don't want to take any risk, whereas SIP is for moderate risk taker. You can say that. Now, have a look at Rahul and Ram's story. Rahul was FD level like many of you, and Ram was my subscriber, so he invested money in SIP. Both Ram and Rahul invested 6 lakh for 10 years, but Rahul invested 6 lakh in FD, whereas Ram invested in SIP. So, Rahul corpus value was 9.77 lakh. Total profit made was around 3.77 lakh, whereas Ram corpus value turned out to be 13.9 lakh. Total profit made was around 7.9 lakh. So when you look, Ram got almost 2 times profit as compared to Rahul. Both did same investment amount of 6 lakh. Rahul did 6 lakh lump sum in FD, whereas Ram did 6 lakh in the form of SIP. Both time horizon was same, which was for 10 years, and the only difference came because of financial knowledge. So don't be like Rahul, be like Ram. If you don't want to miss any personal finance knowledge in the future, you are always welcome to become my subscriber like Ram and grow your financial knowledge. Getting back to topic, before you make your mind saying FD is bad or SIP is good, wait, listen, every investment option has its own role. Now it's your choice how efficiently you can use them in your favor. Listen, you should use FD as an emergency fund and SIP for long-term goals. Okay? You will say, what about savings, accounts, bonds, real estate, cryptocurrency? Which investment option is best for me? So watch this video.